The stock we're looking at today is Travelers Insurance, which is a $29 billion insurance company. They've been around for over 150 years and they have over 30,000 employees. Their headquarters are in New York. The company provides commercial, personal property, and casualty insurance to businesses, government units, associations, and individuals. They have operations in the US, UK, Canada, Republic of Ireland, as well as a joint venture in Brazil. Um, so, given that, starting off, what we're looking at is a comparison of Travelers to Allstate, as well as just the insurance industry in general. First, we see the quote from Friday for Travelers was $80.26. They do pay a yield of 2.46%. Allstate pays a dividend 1.91% yield currently, while the S&P currently pays 1.86%. The return on equity 5-year average numbers, here we see Travelers Insurance has an advantage 10.57%, while Allstate only 6.76%, which is close to the industry average of 6.61. In case you think return on assets is a better metric to look at for insurance companies, we see here that Travelers is also ahead of Allstate, 3.52% versus 1.82%, with the industry average at 2.18. We're looking at a 7-year price to earnings multiple here, just to not lay too much emphasis on a single year's number. So we see Travelers is currently significantly cheaper compared to Allstate, 12.76. Allstate 16.77. The industry average right now is 15.47. So Travelers looking cheap from a PE perspective. The price to book ratio 1.16 for Travelers, similar to Allstate 1.14, and the industry average 1.28. We see another advantage both to Allstate and the industry in general, looking at price to cash flow, 6.33 for Travelers versus 9.9 for the industry. Allstate is also slightly cheaper to the industry on price to cash flow, 7.18. The net profit margin for Travelers, again, we see an advantage 14% versus around 7% for both Allstate and the industry. One important thing that to mention is the consistency. We want to see how these companies do in bad times. In 2008, Allstate lost 1.68 billion, while Travelers still had reduced net income but still earned 2.92 billion. And so that's just a important point, that they're more consistent, reliable, and of course they've had positive earnings for over the past 10 years. Here we see also that revenues have been increasing for Travelers consistently every year, and also we see they're generating good cash flow. Cash flow from operations here we see is pretty consistent. Next, here we're looking at a chart for the last several months for Travelers stock, and we see that they've gone down more than the S&P. This is over a 10% drop here, which is one reason that we're seeing a pretty good opportunity to buy Travelers at current levels. Based on the numbers from the previous slide, we see from the RSI that they're in oversold territory, as well as we can see that in the slow stochastic here if you're interested in technicals. So considering all that, it seems like Travelers is it may be a good time to initiate a position in their stock at current levels. So that sums it up for this edition. Remember to check the blog with the address seen here for the next post. Thanks. Bye.